All right, today we're cracking open the playbook of a true energy giant. We're talking about ExxonMobil, and specifically how they plan to dominate not just today's market, but tomorrow's too. So let's get right into their Q3 strategy.
So, ExxonMobil's CEO, Darren Woods, came out and said their results are, quote, truly in a league of their own. I mean, that is a bold claim, right? Especially in an industry this competitive. So you have to ask, what's giving them that kind of confidence? What's the strategy?
Well, that's exactly what we're going to break down right now. We're diving into the three pillars they're using to back up that claim. And this comes straight from their Q3 earnings call. It's all about record-breaking production, a really unique tech advantage, and, well, just being better at building huge projects than anyone else.
All right, pillar number one, record-breaking production. This is really the foundation of their power. At its core, the strategy starts with just unbelievable, record-setting output from their crown jewel assets.
And this production is really a tale of two powerhouses. First, you've got their huge offshore fields down in Guyana, which are pumping out more than 700,000 barrels every single day. Then you've got the Permian Basin, right here in Texas, hitting an almost mind-boggling 1.7 million barrels per day. I mean, together, these are the two massive engines driving the entire company forward.
But look, these aren't just big numbers on a slide. The key thing to understand is that this fire hose of production creates an absolutely enormous amount of cash flow. And that cash, that's the financial bedrock that funds everything else we're about to talk about. All their tech bets and their massive new projects. It all starts here.
Okay, so that cash flow lets them pour money into the second pillar. And this is what they call their secret sauce, a technology edge that they're convinced is completely unique, something that really sets them apart from the competition.
Now, to really get this, we need to talk about a little something called proppant. Okay, so in modern drilling, you fracture rock deep underground, right? Well, you need something to prop those tiny cracks open so the oil and gas can actually flow out. That's what proppant does. Think of it as a kind of super-engineered high-tech sand.
But here's the twist. This is where Exxon's secret sauce comes in. They didn't just buy proppant off the shelf, they developed their own. It's a proprietary, super lightweight proppant made from a cheap refinery byproduct called coke. And because it's so light, it gets carried way deeper into those fractures, propping open more of the rock.
So what's the result? Well, it's a total game changer. This little innovation lets them get up to 20% more oil and gas out of the exact same well. That is a massive boost in efficiency. And since they make it themselves from a byproduct they already have, it's an advantage that's incredibly hard for anyone else to copy.
But here's where their tech story takes a really interesting turn. It's not just about oil. They're taking what they know about molecules, and let's be honest, they're experts at it, and applying that knowledge to a completely different field, the EV battery market.
Yeah, you heard that right. They've come up with a new kind of graphite for battery anodes, and the claims are, well, they're pretty staggering. We're talking about batteries that could charge 30% faster, give an EV 30% more range, and get this, last up to 4 times longer. I mean, if they can pull this off at scale, that is a huge, huge deal for the entire EV industry.
Now, they're not naive. They know they're jumping into a market with some pretty big, established players. So their whole strategy, which this quote really nails, is to compete on cost. They believe the only way to win in the long run is to be on the very low end of the cost of supply curve. So it's not just about making a better product. It's about figuring out how to make it way cheaper and more efficiently than anyone else.
Okay, so that brings us to the third and final pillar of their playbook, building the future. And this is all about just pure project execution. Their claim that they can build massive, incredibly complex projects better, faster, and cheaper than anybody else in the business.
And they've got the numbers to back it up, at least according to their own analysis. They say they're juggling about 3 times more of these mega projects than their average competitor. But it's not just about being busy. They claim they're doing it 10 to 20% cheaper and over 20% faster. So you see, it's not just about scale, it's about being fundamentally better at execution.
And if you want a perfect example of this in action, look no further than their Singapore Resid upgrade project. This thing is a beast. It's this hugely complex facility that takes low-value gunk, basically the stuff left at the bottom of the barrel, and turns it into high-value products like diesel. It's a fantastic showcase of what they mean by execution prowess.
So you can see how this ability to actually build things becomes a massive strategic advantage. I mean, this is an industry that's famous for projects going way over budget and way past their deadlines. So if you can be the company that consistently delivers on time and under budget, well, that's absolutely central to locking in your future growth.
All right, let's put it all together. You've got record production, a secret sauce tech advantage, and world-class project execution. So what does this all mean? How do they wrap this all up into a pitch for their investors?
Well, a massive piece of the puzzle is just relentless discipline on costs. And this number is pretty wild. Since 2019, they've managed to cut $14.3 billion in structural costs. And to be clear, that's not just a one-time saving. That's about fundamentally changing how the company works to be leaner and more efficient for the long haul.
And that discipline carries over into how they think about acquisitions. The CEO's line here is perfect. We buy value, not volume. The whole idea is simple. They're not interested in buying things just to get bigger. They'll only make a deal if they're convinced that their special tech or their project skills can make that asset way more valuable. They're always searching for that scenario where 1 + 1 = 3 or even more.
So you take all of it, the massive production, the unique tech, the incredible project execution, the intense cost cutting, and it all boils down to one number that says everything to an investor: 43. 43 straight years of growing their annual dividend. That kind of consistency is the ultimate message of reliability, and it puts them in a really elite club.
So their playbook is crystal clear, right? They're building their future on a foundation of massive scale and technology that nobody else has. But in a world where the energy landscape is changing faster than ever, you have to wonder, will that be enough to truly keep them in a league of their own?